Before we start, okay, I think when I had an initial discussion with PLEA about this session, that what exactly needs to be covered. So, the feedback which I got and the specific requirement which I got was, so we need to discuss few things as far as startups are concerned, more from an consultancy perspective. So, you guys being lawyers or some of you guys who are pursuing their law. So, the overall intention which was conveyed to me was that we need to guide, and the session has to be about consulting. If tomorrow any new client or any company or somebody approaches you to start its own business, so basically somebody wants to get into or be a startup, then what exactly can be done? So, I think so. I'll try to restrict my discussion quite, on a practical level. So rather than just taking you, me being a chartered accountant, I do not want to guys tell you about which all sections are covered, which all exact provision is applicable in GST. So that's something probably that's at a micro level. But in order to initiate your conversation with a client and in order to rather impress a client at initial stage itself, what exactly needs to be done? What guidance we need to provide to those clients? I think that is something which I'll try to cover it up. So, I think, and as far as possible, I'll really appreciate if you guys could revert me, because since we are interacting virtually, it's quite difficult for me to get a feedback. I can't see you guys, so at least if you could help me out on chat to revert, that will be really great. So now as far as startups are concerned, as far as various schemes compliances are concerned, so as you might be already aware, so as you can look have a look at screen, so we'll be discussing about various startup compliances from formation perspective, from taxation perspective. Again, taxation and audit will go hand in hand, and there are various schemes. So let's talk about Startup India scheme. Let's talk about various loan incentive schemes. We can talk about certain foreign trade policy schemes. Now, what I would recommend is what I try to do is rather is because as far as compliance is, schemes, taxation, it's quite complicated, and probably within an hour's time I'll be able to give you an insight about everything, so that you guys are well equipped to consider a client in case somebody approaches you to start its own business, or whether he is planning to get into a new venture. So that's the overall plan is. Now, before we start, I would like to just ask you something. When we talk about startups, or when we talk about starting a new business, all of you guys are aware that there are multiple options. But if we talk statistically, can you guys give me a wild guess that, let's say, in a particular month, how many companies will be formed? What do you think? Or how many new businesses will be getting incorporated? Or how many people will be starting their new businesses? Any wild guess? So probably, what do you think? Whether 100 companies will be incorporated, 1,000 businesses will be starting. So what do you think? What will be the ballpark number which you guys think? So it's few thousands, 10,000, 5,000, or just 100, a lakh of businesses. What do you feel? What's your thought on it? Because that's something which will define how much scope we have when it comes to startup industry. So now let's talk about statistically. Now I could get certain statistics. So as far as new incorporations or new businesses are concerned, so as you all can see on the screen that during a recent month, approximately 12,000 companies were incorporated. Around 700 OPCs were incorporated, around 3,500 LLPs were incorporated, and around 2,000 partnership firms were registered. Again, this partnership firm number is only restricted to the state of Maharashtra. So you can see in a month, even if we keep ourselves restricted to firms only in Maharashtra, probably around 20,000 businesses have been registered. This is just a number wherein registration is mandatory. So even if we talk about the companies or new businesses who are planning to start their business in a structured manner, probably in a month, only in Maharashtra, approximately 20,000 businesses are getting started every month. So from this, you can understand that there are so many businesses who are in need of this consultancy. Probably they are not at all aware. The fact that we consultants, we professionals are talking about which all benefits are available to startups. You can understand what a common man or a regular person who is planning to start his business. So he may not be even aware about all these things. So, the overall purpose is, let's try to deep dive into some of the aspects wherein you can consult your clients. So as far as startup industry is concerned, of course, you guys being into legal, I may not discuss more about which all legal forms are available. So we'll just briefly brush upon which all legal forms are available. Rather than that, we'll be talking more on which all registrations are mandatory. The moment somebody comes to you and any business talks about, I want to, somebody comes to you and he says that I want to start my own consultancy, or somebody might say that I want to start my own restaurant, or somebody will be of the view that I want to get into trading, I want to sell certain products through Amazon, through Flipkart. Then what should exactly I do? That point of time, the clients or the people who usually start business, they are quite confused that which all things are required. So, we being a consultancy firm, we probably, so far we would have helped more than 500 or 1,000 people to start their businesses. Now, when it comes to consulting them, what we observed was that currently, people are consulting, the consultants are basically advising people quite in isolation. So there are few consultants who are, having expertise only in GST. There are few consultants who are having expertise only in incorporations. So whenever somebody approaches that consultant, he tends to advise that client only in an isolated manner. So he'll just say, you just form a company and start your business. I don't know about which all registrations are required. So we'll try to cover it up, which all registrations are required. So first of all, just to briefly brush through which all formation options are concerned. So yes, whenever somebody wants to start a business, if he is planning to do it quite in an we can say a commercial sense or quite in a structured manner, then so far people used to go for company. Now again, companies are entirely governed by registrar of companies. Similarly, if there is a person who wants to start its business and he is all alone, means he doesn't have a partner or he doesn't have any other person who can be taken on board as a director, because company typically requires minimum 2 directors and LLP requires minimum 2 partners. So similarly, if somebody wants to start his business on his own and he wants to get himself registered, he doesn't want to just go ahead with a proprietary option, then probably OPC is an option which is available. So the company, OPC and LLP, these are the 3 options which any startup has initially while registering its own business, if he wants to do it in a structured manner. So basically, if somebody wants that, I'll be approaching certain corporates, or I'll be approaching, or I'll be applying for tenders, or there is a possibility that I'll be having international clientele. So, typically what happens is that whenever you have foreign clients, they tend to Google it around that whether so-and-so person is approaching me for a business, then whether he is actually registered in India or not, to just check the authenticity. So all those people who are concerned about authenticity, whether somebody will check whether you are registered or not, then for such businesses, if any client comes to you and says that he wants to initiate a startup procedure, and so startup procedure will always start with a legal form registering the business in itself. So that point of time, for those kind of class of people wherein they are looking for authenticity, they are looking for something to be done at a corporate level, then of course registrar of companies is the platform. Because if you form a company, if you form an OPC or if you form an LLP, your name and everything gets registered on the registrar of companies. So basically Ministry of Corporate Affairs register you. So the moment you register your business in a company, as an OPC or as an LLP, you have to first apply for a name. So basically the ROC, the registrar of companies, will first check. So let's say I decide to initiate a new business and I decide that the name of that business has to be Shantanu and Company. Then registrar will first check whether there is any company, OPC or LLP which is already formed with the name Shantanu. And it will again check whether it's in the same line of business. So let's say I want to start a business with Shantanu and Associates as a consultancy firm. And if there is a company, let's say, Shantanu Foods, which is entirely into food manufacturing, then probably ROC will allow Shantanu and company. But if there is already, business registered with a name Shantanu and consultants, then probably it will not allow me to register a company, OPC or LLP at initial stage itself. So probably, all of you guys might be assisting clients from trademark and copyright perspective, but this is kind of, you can say, a pre-check. So even while forming the company on ROC or forming an OPC or LLP on ROC, the registrar of companies even will check whether there is any trademark, whether there is any device mark which is already registered or not. And if there is any conflict, then at initial stage itself, you won't be allowed to form a company, OPC or an LLP. So I hope you guys are clear that the first formation options, yes, legally, all of you guys are already aware what's the difference between company, OPC and LLP. So I may not get into it, but from a commercial sense, from a consultancy sense, a company, OPC and LLP can be suggested to only those clients who are planning to do it little bit things on a larger scale, little bit who is planning to do things on a long-term basis. It's not suitable for someone who is trying to do a business on a trial and error basis. He is saying that, I'm a working professional or I'm a salaried person and I just want to try out whether a business works or not. Then probably these three options are not suitable. Then which all options are suitable for people, who are planning to do things on a smaller scale, who are planning to just try out things? Then probably initially to start with, a partnership firm is advisable if there are more than one, stakeholders who are involved in that business, or simply a proprietary business. So by proprietary, all of you guys already know that what I mean by proprietary is that technically you don't need to form something. Your individual PAN will hold as a proof. You just need to take certain additional registrations. Of course, we'll talk about those registrations which are required, and you can just start the business. That's it. So I think these are the 5 preliminary options which are available. Forming a company, so it can be a private limited, public limited. So the multiple companies options are available. It can be a one-person company. It can be an LLP, it can be a partnership firm, or it can be a proprietary business. Now, again, when it comes to partnership firms, people are a little bit confused that whether a startup has to be a registered partnership firm or even an unregistered partnership firm will do. Then, the answer is that in most of the states, partnership firm registration is not mandatory. But when we talk from a legal perspective, it is always advisable to get your partnership firm registered with registrar of firms so that it will have a legal standing. Otherwise, all of you guys already know that an unregistered partnership firm does not have any standing in the court of law. So probably these are the options which are available to, initiate with a startup procedure. Now, yes, for most of the formations, typically what happens, as rightly mentioned by PLEA, that you guys approach company secretaries. But, to be frank, what happens is that as a good consultant, we should always see that which firm is suitable. Now, as far as company secretaries are concerned, or even a normal consultant is concerned, people will always recommend that, go for a company or an LLP or OPC. And that too, most of the people always advise to go for a private limited company. But to be frank, in a commercial sense, yes, most of the people say that go for a private limited company because there are advantages. But along with those advantages, there are a lot of compliances also. People has to go for certain audits every year. Annual compliance cost is there. So if you really ask me from a value addition perspective to a client, the moment we tell them that, if he is planning to do something on a small scale, and if we tell him that you go for a private limited company, it's like, that's something which is not necessary. You are telling a guy who just wants to roam around within city, to whom even a two-wheeler is suitable. You can just tell him, guys, go for an Activa, and that's more than sufficient for you. Now, instead of that, you are telling him that you go for a Fortuner. So, that's something not sensible. He wants to probably buying a Fortuner, then the maintenance cost of that Fortuner, the average which a Fortuner will be giving, the cost of maintaining that car will be much more higher than his requirements. Rather, I would say it will be much more higher than his capability also. So, unless and until his business does good, he'll not be able to sustain the private limited company. So, any of these small clients who are planning to go for a small business or who are planning to start afresh, I would recommend either you tell him to go for a partnership firm or an LLP, because LLP is something which is like an best of both the worlds. LLP is having all the legal benefits of a private limited company and all the flexibilities of a proprietary or partnership firm. So it is always sensible that we can recommend clients to go for either to a partnership firm or an LLP, because tomorrow if his business actually grows, then he always has an option to convert that partnership firm or LLP into a private limited company. So that's something which I think that will be quite a qualitative advice which we can give. And as far as fees are concerned, to be frank, even if you think from a commercial sense that अगर मैं partnership firm बोलूंगा, then will I get a lesser amount of fees? So it's not like that. Registering a partnership firm and going for an LLP formation, there is not much fees difference. So even for us, probably giving the right advice will be more suitable than just telling him to go for a private limited company for few thousands. Now, as far as registrations are concerned, so there is quite ambiguity. People are not aware which all registrations are required. There are consultants in market who are telling that for starting a business, you need to go for a GST registration. Somebody says that, if you want to start your own proprietary, then you need to apply for a new PAN card. So yeah, there are consultants who are even telling that now, let's say, I am having my own individual PAN and I want to start a new business. So let's say I want to start with something called as SPV and trading company now, or I want to start with Shantanu and trading company. Then there are consultants who are telling that, no, you have an individual PAN with Shantanu Bagwe. Along with that, you need to apply for a PAN with Shantanu and trading company. Now, such advices are actually given. We have met clients who have come to us with two PAN cards, one with Shantanu and trading company, one with Shantanu Bagwe. So that's quite confusing for people. So people are quite confused that while starting a new business, which all registrations are required. So, let's talk about only those registrations which are mandatory. So probably if any client approaches you to incorporate a startup or to start a new business, these are the only 5 registrations which are required. Now, if you talk about this 5 registration, now PAN is something, if somebody wants to go for a proprietary business, he already has a PAN. Apart from proprietary, yes, if somebody decides to go for a partnership firm, LLP, private limited or OPC, then he has to go for a PAN. Then TAN is something, a registration which is related to tax deduction at source. Now it's at the moment we can just consider that if there is any partnership firm or any proprietary business whose turnover is quite on a higher side, wherein income tax audit is applicable, then only TAN is mandatory. Otherwise, TAN is mandatory for company, OPC, and LLP. So PAN is something which is mandatory for all the businesses. If you are a proprietary concern, you don't need a separate PAN. Your individual PAN can be used as a proof for your business. TAN is mandatory only for OPC, company, LLP, and audit cases. Now, third registration, which ideally a new business should have, is something called as Udyam. So it's nothing but MSME, so medium and small enterprises registration. Now, it's not something mandatory, but it's something which is always advisable to go for this. Now, this is a registration which will help you out in getting all the benefits which a small startup can get out of all the government schemes. So let it be loan schemes, let it be certain provisions of Companies Act. If you want to take advantage of all the benefits which government has taken to all the medium and small enterprises, to all the startups, then you need to have an Udyam registration. Now, Udyam registration is something which hardly can be done with a cost of 1,000 rupees, and it does not have a recurring cost, or it does not have any statutory compliances. Like in GST, you need to file certain GST returns. In income tax, you need to file income tax returns. But in Udyam, you don't need to go for any statutory compliances every year. So Udyam is something which is not mandatory, but it's always advisable. It's a must-have registration for all the startups. So first one is PAN, TAN, third one is Udyam, fourth one is shop and establishment. Now most of the municipal authorities have a mandate that if you want to start a business, you need to take a shop and establishment certificate. And fifth one is profession tax. Now, profession tax is something which is a state law. So most of the state governments are having it mandatory. It's mandatory to have a profession tax number, wherein if you want to start a new business. So profession tax registration is something. Now even profession tax registration is mandatory for lawyers. Now it's mandatory for all the professions. So even a chartered accountant, if I'm starting my own practice, or a lawyer who has taken his own certificate of practice, then he need to go for a profession tax registration. So probably if you ask me about mandatory registrations, these are the only 5 mandatory registrations which I feel that a startup must have: PAN, TAN, Udyam, shop and establishment, and profession tax. And to be frank, getting these registration is not costly. There is no exorbitant cost which is attached to it, so that if we tell people to go for this registration and they'll have to incur cost. No, it's something which even by a simple vegetable vendor can afford. It's that affordable. So these are the only 5 registrations. So we were going to talk about certain do's and don'ts about startups. So whenever somebody wants to initiate a startup procedure, there are people who are telling that you need to go for a GST registration. You will have to get your accounts audited. You will have to have a private limited company. So it's absolutely not necessary. So as we already mentioned, there are 4 to 5 formation options which are available. Now, even if you go for a private limited company, or even if you go for an LLP, OPC, proprietary, these are the only 5 mandatory registrations which are required at a smaller scale. All other registrations like labor law registrations, GST audit, income tax audit, those are the compliances which come into picture when that startup achieves a certain level of business. Now, what are those threshold? Which are those limits after which we can go for those mandatory registrations? Of course, we'll discuss in upcoming slides. So I hope till now everybody has some clarity about startups. Now, Jitendra has asked that what is Udyam registration? See, Jitendra, basically Udyam registration is the small and medium enterprises. So the government of India has various schemes, or even in Companies Act, even in Income Tax Act. In most of the regulations, we have multiple benefits which are available to small and medium enterprises. So if you want to avail those benefits, if you want to go for those benefits or incentives which are available to small and medium enterprises, then government has made it mandatory that you take a Udyam registration. In Udyam registration, basically we just mention that this is the scale of my business. I only have this much employees. My turnover is below this much amount. I have investment of only this much lakhs or this much thousands. And on that basis, it is decided whether you are a micro enterprise, whether you are a small enterprise, or whether you are a medium enterprise. So that's it. It's that simple. It's a single form registration. And yes, the second question which you have asked is that whether shop and establishment certificate is mandatory for work from home. Technically, it's not mandatory, but unfortunately, at a practical level, when you decide to go for a bank account opening, so if you want to open a current account, for professionals like lawyers or chartered accountants, it's quite easier. The membership certificate or the firm registration which we get either from Bar Council or from chartered accountants or from our institute, that firm registration certificate is more than sufficient to go for a registration of our firm, our proprietary business. But when it comes to other regular businesses, nowadays banks are insisting that you need to have at least 2 statutory registrations. So one statutory registration which we can go for is Udyam, and the second one, which most of the banks are insisting, is shop and establishment certificate. So technically, it's not mandatory if you're working from home or if you're a working professional. But on a practical note, since banks insist for 2 statutory registrations, rather than going for a GST registrations, it is quite advisable to go for a Udyam and shop and establishment certificate. So I think, am I clear till this point? As far as formation is concerned, I think I'm pretty clear that as far as legal form is concerned, I need not get into it because all of you guys are well aware than myself. You guys have much more knowledge about the nitty-gritties from a legal perspective between a company, LLP, OPC, all those forms, which all mandatory registrations are there. As we already discussed, probably there are just 5 registrations which are mandatory, nothing more than that. So whenever a new client approaches, he wants to start a new business and he wants to keep his compliances to the minimalistic level. Just advise him to go for only 5 registrations and he can start a business. Now, so if we talk about a proprietary business, PAN is already there. If he is planning to take money, so let's say tomorrow I decide that, I'll be trading into certain home appliances, small products, and I don't even want to sell something online or anywhere. I just want to approach my family and friends and I want to sell it. Then as a proprietor, technically I don't even need an udyam. I don't even need shop and establishment. Then I don't even need TAN registration. PAN is already there. I can just start a business. So it's as simple as that for proprietary businesses. So now, let's talk about taxation. Now, when it comes to taxation, of course, I haven't considered the nitty-gritties of each laws because I don't feel that that's necessary at this stage. As far as startups are concerned, we can just get an overview of all these laws so that while you advise clients, you won't be ignorant. So my whole purpose is that you will be able to tell your clients that this is the applicability, and once you reach this level, you need to take care of these laws. Now, these are certain compliances which you need to take care of. Now, then either you can do it on your own or you can recommend him that for these taxation laws, you need to approach another consultant. So when somebody starts a business, the mandatory taxation compliances, whenever a startup is into picture, the mandatory compliances which are there is the GST, which can come into picture at a later stage, profession tax, which we have already talked about, the income tax and TDS. Now, of course, we'll get into each one of these at a micro level, that what exactly is the mandatory limit, what exactly needs to be done so that you can advise your clients. Now, if we start with GST, now the first myth about GST registration is that people say that if you want to deal with any corporate client or if you want to start your own business, GST registration is mandatory. It is not so. GST registration is mandatory only when your turnover is more than 20 lakhs in case of service providers. So for professionals, for consultants, if your aggregate turnover is beyond 20 lakhs, then you need to go for GST registration. And if you are someone who is not into consultancy, who is not into provision of any type of service, you are either into manufacturing, you are either into trading of goods. So in all those cases, the turnover limit is 40 lakhs. So if any client approaches you and he says that I want to manufacture something or I want to buy certain products, I want to, get into trading, then 40 lakhs. Till the time his turnover crosses 40 lakh, technically GST registration is not mandatory. Again, one thing which we need to understand is that GST is a state specific registration. So if somebody is planning to get into a business or there is a startup who is planning to have multi-state presence, so let it be, he might be having warehouses, godowns in multiple states. He might be having admin offices or only sales offices in multiple states. So even if he has any presence in other state, now if his turnover crosses 20 lakhs or 40 lakhs as applicable, then one thing is pretty important is that if he is having presence in multiple states, then GST registration is mandatory to be taken in all the states. Now, again, when I'm talking about limit of 20 lakhs or 40 lakhs, it's on pan India basis. So let's say if you have a client who has registered a startup and he is having his offices into 4 states, and in each state, his turnover is 20 lakhs or let's say 15 lakhs. Now, this 15 lakh limit is applicable on pan-India basis. So for 4 states, that on totality, his limit will be 60 lakhs, 15 lakh for each state. For 4 states, it will be 60 lakhs. Now, in this scenario, the GST registration will be mandatory, even though in each state, his turnover is below 20 lakh. So of course, the limit of 20 lakh or 40 lakh is on the basis of definition of aggregate turnover, in GST law. So the GST law says that the GST turnover limit has to be calculated on pan-India basis and not on state-specific basis. Now, apart from this, the GST registration, the moment if somebody is, it's mandatory for someone to go for a GST registration, the 20 lakh and 40 lakh limit is the criteria. After this, in GST, there is something called a GST audit, or we can say GST annual return. And GST annual return or GST audit, we can say it's applicable only if that startup's turnover is more than 5 crores. So basically, if you have a startup who is having turnover below 20 lakhs or 40 lakh, no need to go for GST registration. If turnover is beyond 20 lakh and 40 lakhs, then yes, monthly GST return filing compliance is there, and annually an additional GST compliance is there, wherein turnover is more than 5 crores. So I think so far, as far as GST is concerned, in a nutshell, that's the only thing which you need to be aware of to consult your clients. Now, I think Harpreet sir has asked that how to get Udyam done. Udyam is the entire registration process is online. We can just apply online and get an Udyam registration done. For proprietors, the entire authentication and everything happens through Aadhaar OTP. So that way it's pretty simple. Even as consultants, nobody will be charging more than 1,000 rupees for getting an Udyam registration. So it's that simple, we can say. And for proprietor, there is no turnover restrictions as such, as long as you are within the MSME categories. So anybody can go for Udyam registration. So now the first law which becomes mandatory for any new startup is GST. The second one is profession tax. Now, as we were already talking, out of 5 mandatory registration, one was profession tax. Now, basically in profession tax, there are 2 registrations which are required. One is a mandatory registration, which is called as profession tax enrollment certificate. Now, it's something, so basically the profession tax amount which is to be paid annually is rupees 2,500. So again, each state has their own profession tax laws, but more or less they are similar to each other. Now, as far as profession tax registration is concerned, the profession tax enrollment certificate is something which we pay as a business or as a professional. So since I am a practicing chartered accountant, or if I am a practicing lawyer, then every year I'll take, once I need to go for a profession tax enrollment certificate, it's typically, called as PTEC registration. Now I need to go for PTEC registration once, and every year I need to pay 2,500 rupees, and it's mandatory. The moment you have a business or profession, there is a mandatory requirement that you need to go for profession tax registration. Apart from this, there is a second type of registration which is called as PTRC, basically profession tax registration certificate. Now PTRC is mandatory when you have salaried employees, so all of you guys or some of you guys, it might be salaried. So if you would have observed that every month from our salary, 200 rupees profession tax gets deducted. And at the end of the year, 300 rupees are deducted. So totality in a year, 2,500 rupees are deducted from our salary. Now this PTRC registration is mandatory the moment, as far as Maharashtra is concerned, the limits are if I have a male employee whose whose salary is more than 7,500 rupees a month, then I'll have to go for professional PTRC registration. Or if I'm having a women employee who is having, wherein she is having a salary of rupees 25,000 or more on a monthly basis. So basically, PTEC registration is mandatory for any business. PTRC registration is only mandatory if you have an employee, if there is any startup who is having an employee whose salary is more than 7,500 in case of male employees and 25,000 in case of female employees. Of course, these limits which I'm talking about is for the state of Maharashtra. For every state, the limits may differ, but the registration is mandatory only when your employee's salary is more than a particular threshold. Now again, PTRC registration, once taken, you need to deduct profession tax from salaries, and then you need to go for monthly payments and returns as per applicable regulations in each state. So I think I'm clear when GST is mandatory and when profession tax is mandatory. In profession tax, we need to think about 2 things: PTEC, which is always mandatory, and PTRC is mandatory subject to salary limits. I think, Harpreet, what about a sole proprietor with no employee on board? What in case of daily wages, profession tax will apply? Yeah, again, if there is no employee on board, technically profession tax PTRC registration is not mandatory. But if you typically talk about Maharashtra profession tax law, then even daily wages are covered. Even if you are paying someone daily wages and his monthly amount is more than 7,500, then you need to go for it. Again, there are certain exemptions which are available, like the Mathadi workers and all. So those are not covered. Those have been specifically exempted. But otherwise, if you are having a new startup who had to pay daily wages to someone, and if the daily wage amount on a monthly basis goes beyond particular limit, the profession tax PTRC registration is mandatory. So as far as taxation law is concerned, GST and PTRC is something which we discussed. Now, income tax, it's pretty simple that any startup which comes to you, it has to file income tax return. In addition to its income tax return, a statutory or tax audit is applicable in case his turnover is more than 1 crore, or if he is not dealing into cash. If his cash receipts are not more than 5%, then even income tax audit will be applicable to a business if his turnover is more than 10 crores. So you can understand, if you have a business, if you have a new startup coming to you, then he needs to just file an annual income tax return, and tax audit is applicable only if his turnover is more than 10 crores. Of course, in case of professionals, now these are certain defined professionals like medical professionals, lawyers, chartered accountants, company secretaries, which have been defined by income tax law. For them, if their turnover is, if their professional income receipts are more than 50 lakhs, then only tax audit is applicable. And of course, the moment tax audit is applicable, you need to go for TDS deductions, and applicable TDS returns, payments, and all those things come into picture. So as far as taxation is concerned, we can be pretty clear about consulting people. The one thing is GST mandatory only when you cross threshold. Profession tax, PTEC mandatory, PTRC mandatory only when salary threshold is crossed. Income tax, one annual return is mandatory for all the businesses, and tax audit is applicable only after crossing a threshold. TDS only to those assessees wherein tax audit is applicable, and TDS is mandatory for companies, LLPs, and OPCs while making their payments. Now, as far as tax audit was concerned, so now again, for any startup, when we talk about audits, so there is one type of audit which is applicable is income tax audit, which is entirely mandated by Income Tax Act, for which we talked about threshold, which is 10 crores and 50 lakhs as applicable. Now, apart from this, if any business who is having a partnership firm or a proprietary business, then the only audit which is applicable to that business is income tax audit. Now, if you have any business which is, from legal perspective, it's a private limited company, or it's a company, it's a one-person company, or LLP, then one more additional audit which comes into picture, which is a statutory audit, which is mandated by Companies Act or LLP Act. Now, when statutory audit is applicable, so first of all, for companies and OPCs, it's mandatory irrespective of your turnover. For LLPs, if your turnover is more than 40 lakhs, then statutory audit becomes applicable. So till the time any LLP doesn't cross 40 lakh, you don't need to worry about audits. So since LLP's turnover is less than 40 lakhs, neither tax audit will be applicable nor statutory audit will be applicable. For companies, these audits are mandatory. The statutory audit is always mandatory. Now, I think this is the quite in a nutshell brief about audits. So for any new startup, you need to tell that there are two types of audits. Statutory audit is applicable only in certain scenarios in case of LLP, OPC, and private limited. And for others, for everyone, any form of legal structure, tax audit is applicable only when you cross a particular threshold. Now, let's talk about various schemes. Now, when I'm talking about schemes, I'll just give you a brief. Now, first of all, let me tell you that there are thousands of schemes which are available for startups. Again, most of the schemes which are available to startups are, there are schemes which are restricted to a particular kind of industry. Like there are some various schemes, loan schemes, startup schemes, or foreign policy benefits which are available, which are, either available to like cold storage warehouses or a particular healthcare industry. There are schemes which are available to manufacturing industry. Again, in that, there are certain schemes which are available to defense sector, aerospace industry. So there are thousands of schemes which are restricted towards a particular industry. So today we don't need to talk about schemes which are restricted to a particular industry. So I have tried to cover only those schemes which you can guide to your clients if he is planning to have a new startup, and which are generic in nature, which is applicable to everyone. So as far as Startup India scheme is concerned, now, Startup India scheme is quite a fresh scheme. So it says that if you are a LLP, if you are a registered partnership, or you are a company, so Startup India scheme can't be availed by an unregistered partnership firm, or it can't be availed by a proprietary business. So to avail the benefit of Startup India schemes, you will have to be either a registered partnership firm, an LLP, or a company. That's a mandate. Once you are either of these three, then you need to apply to something called as DPIIT. So basically, you need to take an approval from Department for Promotion of Industrial and Internal Trade. So it's typically called as DPIIT certificate. So to avail any of the benefits under Startup India scheme, you need to apply to DPIIT and take a Startup India scheme certificate. The moment you have that certificate in place, you are eligible for most of the benefits under Startup India schemes. Now, which all benefits are available in Startup India scheme? So the most popular benefits which you can recommend to your clients is, if you go for a Startup India scheme, if you register yourself as a startup, then basically there is an income tax incentives. Of course, it's available only to those startups which have been incorporated between 2016 and 2022. Now, so this is only with regards to income tax benefit. So all those startups, so even if you have any of your clients who have been incorporated between 2016 and 2022, and they may not have gone for startup registration, that's okay. For income tax benefit, they can still apply for Startup India scheme as long as their incorporation date, their legal incorporation date, is between a span of 2016 to 2022. Once they apply for Startup India scheme and they get a certificate from DPIIT, they get 100% tax rebate for 3 years. So income tax says that if once you get an approval from DPIIT, you have choice in next 7 years. You can take income tax benefit in any of the 3 years. As long as your turnover is below 25 crores, you are eligible to take that. Now, second income tax benefit which is available to startups is something called as angel tax exemption. So, most of the startups nowadays are going for angel investors. So there are companies, there are angel investors who are planning to pump in money. Now, in that case, we may not discuss about the nitty-gritties, what is angel tax, but at the moment you can consider that whenever any angel investor invests into a startup, there are multiple tax provisions which come into picture from income tax angle. Now, that's typically called as angel tax. So if you are registered under Startup India scheme, if you have a certificate from DPIIT, then you get that angel tax exemption. So as far as income tax is concerned, yes, 3 years tax holiday and angel tax exemptions, which is available. So now this is the avenue which is available if you incorporate a new startup and if you go for a Startup India scheme registration. Now, apart from income tax, which all benefits are available? So some of the prominent benefits which are there are, the first one is that, yes, there are certain labor law relaxations up to 5 years, because all of you guys know that as far as labor laws of India are concerned, they're quite stringent. The moment somebody starts a new factory or a new business and laborers are involved, then there are visits from labor department. Many of the people are not aware about labor law compliances. So the Startup India scheme has provided certain labor law relaxations up to 5 years. Then let's say, unfortunately, any of the startup doesn't do well, then all of you guys are aware that winding up of a company is quite a cumbersome exercise. So Startup India scheme has specifically provided certain relaxations in respect of winding up procedures, so that a procedure which typically takes around 6 months time or minimum 6 months time for winding up of a company, that process can be reduced to approximately 30 to 90 days for a startup, considering certain advantages of Startup India schemes. Apart from that, if you have a startup and if any client has a startup and he says what all benefits are available, then if you are a registered startup, then in most of the government tenders or public procurements, there are many relaxations which are provided. Like, you don't need to give any performance guarantees, you don't need to give any deposit, which otherwise any other business has to. There are tenders, like if you want to apply for this tender, you need to give us a pre-deposit of 50 lakh rupees. Now that gets completely waived off for a new startup. Now, in some of the government schemes, there are performance criteria. Like if you need to have a turnover of at least 5 crores in last 3 years, or you need to have a capital investment of at least 10 crores. So typically government contracts also has certain past performance criteria. So Startup India scheme allows relaxations in case of certain tender requirements, certain past performance criteria. So being a registered startup, you become eligible for that particular tender, even if you don't have any business in past few years. That's more than sufficient. Now, in case of Startup India registrations or Startup India benefits, one of the important criteria which needs to be understood is that it has to be a new business. So now let's say if your client already has a private limited company or already has an established business, and the same promoter incorporates a new company, then it's not allowed. At the time of Startup India registration, probably that application will be rejected, because to consider yourself as a startup, or you need to consider yourself as a startup under Startup India scheme, it has to be a new business. It cannot be just an hive off from an existing business. It cannot be just a new incorporation from your existing promoters. It has to be altogether a new business idea for that promoter, for that business owner. So I think, am I clear till here about Startup India scheme? If it will be really great if you could just give me a heads up, or if you want me to talk about anything about Startup India scheme. Now, loan schemes and foreign trade policy. Now, these are altogether areas, rather whatever areas we discussed. My intention was just to discuss, probably the tip of the iceberg. I wouldn't have been in a position to cover it up, the micro details of all the schemes. The overall idea was to give you an insight so that you can consult your clients accordingly, and at least they remain with you. The work remains with us rather than they approaching some other consultant, and so rather than telling them that we don't know anything about startup, now probably you guys know something about everything rather, which is related to startups. So as far as loan schemes are concerned, now these are the two quite prominent schemes which I really feel that they are not highlighted neither by the government nor by the banks. Now, typically, on a practical note, what happens is that whenever a new scheme is introduced for any startups, typically those are the schemes wherein government says that you don't need to give any collateral. You don't need to give any security. You don't need to mortgage anything. Now, the whole reason is that, of course, a startup won't have anything to mortgage. A startup won't have past performance. They need funds to grow their business. Now, typically a stereotype approach which is being followed by most of the organizations is that what happens is, whenever a startup approaches banker, usually branch manager knows that these are little bit risky proposals. A startup may work or may not work. So whenever a government at micro level implements any government scheme, any loan scheme, usually a quota is given that, to particular regions. So, you would have heard in budget, government says that 10,000 crores have been allotted to so and so scheme. So that's the announcement which happens at a macro level. At micro level, those 20,000 crores are dissected into each state, to each city, to each bank, even to each branch, that इस ब्रांच को 2 करोड़ का लिमिट है, इस ब्रांच को 10 करोड़ का लिमिट है, depending on the area, depending on the number of businesses in those particular area, that region. So usually a stereotype approach which happens is that, most of the time branch managers are quite keen to keep their, elite customers happy. उनके branch में जिसका सबसे बड़ा business है, they'll try to keep that businessman happy, because he knows that he is the one who is gonna give me more business. He is the one who is gonna take more loans which are secured, because उसके पास already stock है, immovable properties है जो वो mortgage कर सकता है. But they won't typically be interested into new startups. तो उनका usually ऐसे होता है कि उनको बस बोला गया है कि भाई, you have a quota of 10 crores, you can disburse loans under this scheme up to 10 crores. So the first thing a banker does is that he'll call the most, the biggest businessman in his branch. He'll say that, this is a scheme which is available. You are eligible, you go for it. And typically kind of a biased attitude is formed, wherein rather than giving the benefits to all those startups which are in need, benefits are actually passed on to the people who are actually not in need, they actually have a collateral, but still they are eligible for those benefits. Second thing, most of the sales people, the direct selling agents of any banks, they don't recommend this kind of schemes because they don't get any incentive, because these are government schemes. So bank in itself get hardly any revenue from it, because government is the one who is pumping all these schemes, pumping money into these schemes. So there are no commission, there are no schemes which are there are no incentives which are available to salespeople. So they are not bothered about giving an advice to a startup that you go for these schemes. They'll rather tell him that you go for an unsecured loan wherein interest rates are 18% or 19%, or they'll tell him that you mortgage your house so that he gets incentives. So the two schemes which are quite prominent is that the first scheme is CGT-MSE scheme. Now, this scheme is Credit Guarantee Fund Trust. CGT-MSE scheme is a scheme which says that any new startup who is not having any collateral or any security can get an overdraft or a term loan. So if he wants to buy a new machinery, he wants to have loan for his working capital requirement, he wants to build a new factory, anything. So he gets a loan up to 2 crores in case of manufacturers, and in case of other businesses, the limit is 1 crore, which is entirely without any collateral. Now, typically the rate of interest in CGT-MSE scheme is somewhere between 9 to 11%. Over and above that, government charges 2%. The government charges 2% as an insurance. So basically, the CGT-MSE, the Credit Guarantee Fund Trust. Now, this scheme is governed by a trust which is entirely formed by central government. Now, central government says that you pay a premium of 2% to this trust every year. So let's say if your loan amount is 2 crores, then 2% of your loan amount. So the 2% of 2 crores will be around 4 lakh rupees will be paid as a premium to that trust, and the entire guarantee of that loan of 2 crores rupees is given to that bank by central government. So central government is saying that you pay me 2% premium and I'll act as your guarantor. If tomorrow you don't pay this loan, then I'll pay. That's the reason bank have a free hand, because bank says that the entire responsibility has been taken by government. Why should I bother? If that startup doesn't pay, the entire money will be paid to me by government. So CGT-MSE is a scheme which most of the startups are not aware, neither consultants are aware, wherein a loan up to 2 crores can be availed without any collateral. And the second scheme is for all those micro enterprises, like somebody wants to start up his own saloon, somebody wants to start up his own shop, so wherein the capital requirements are quite less. Now, in that cases, there is something called as Mudra loan. Now, Mudra Yojana says that up to 10 lakh rupees, you can either get an overdraft or you will get a term loan. Now, these two schemes are the most suitable and the most prominent schemes which are applicable to all the startups. So CGT-MSME for loans up to 2 crores and Mudra loan for loans up to 10 lakhs. Now, apart from this, there are various other incentives, but just to tell you few. Now, if you have a startup who is a little bit planning to do things quite on a larger scale, or if you have a startup who is who might be planning to approach other countries, foreign clients, foreign countries for his business, and he'll be having a lot of exports, either export of goods or export of services. Then, in addition to Startup India scheme, a lot of benefits are provided by foreign trade policy, under foreign trade policy. So basically by DGFT. Now, as far as these schemes are concerned, just to name two prominent schemes, one is, let's say, you have a startup who is saying that I'll be manufacturing certain things. Let's say I have a startup who is saying that I'll manufacture laptops in India. Just to manufacture this laptop, I'll have to import a machinery, let's say either from China or any other country. So any capital incentive startup who is saying that I want to import certain capital goods, certain machineries from any other country. So the moment you import something from any other country, at the time of import, approximately 10% customs duty is payable. Now that's a huge cost. So if you consider if a cost of a machinery is 10 crores, probably 1 CR is the value of that. It's the value of customs duty. Now, in that cases, there is a scheme called as EPCG, Export Promotion Capital Goods. Now, this scheme says that if you are sure that your startup is gonna export something in next few years, then we'll allow you to import those machineries duty free. We won't charge even a single rupee as customs duty. So that startup is allowed to import machinery at zero duties. And against that, you just need to promise that within next few years, I'll be doing certain amount of exports. So the typical limit is, if I'm importing a machinery worth 10 CR, and let's say if I say that 1 CR, 1 crore is the import duty, then I'll be allowed to import that machinery at zero customs duty. So basically, I would have saved 1 crore of customs duty. Against that, government is saying that in next 6 years, you just promised me that you will earn at least 6 crores, the 6 nines of duty savings. You will earn 6 crores as export earnings. So you will earn foreign exchange to India to the extent of 6 crores, and your entire customs duty is waived off. Similarly, there is EPC visa scheme is eligible for all duty-free imports of machineries or capital goods. Similarly, if you have any startup who is into export and he is planning to import raw material. So let's say if I am saying that, of course, I'll manufacture mobile phones in India, but to manufacture mobile phones, I'll import chipsets, I'll import screens from China, Taiwan, or any other country. Then government is saying that we'll allow duty-free imports of even those raw materials, provided you have an export order in place and you are going to say that I am going to use those raw materials to manufacture a particular product, which will be exported outside India. That's it. So I think these are two prominent schemes, along with loan schemes. These are two DGFT schemes, which are quite relevant and quite useful. So I really feel that moment any startup comes to you, if we, rather than just talking about partnership registration, rather than notarizing the agreement or going for a formation, if we recommend that, if you give them a holistic advice that these are the schemes which are available to you, and this I'm talking about schemes which are applicable to everyone. Apart from this, if we talk in detail about a specific industry, probably we'll be able to advise you more. We'll be able to talk about 10 more schemes which are available. We'll be able to tell you that how a business can be structured in a particular way, considering his nature of business, considering his business requirements, and logistically how his business is handled. So probably I would say this is more of a management consultancy, which we can actually give to our clients as far as startups are concerned. And if these schemes are available, why not we should take advantage of that? Startups can actually take advantage of all these schemes. They can go for right. So you need to help them to make right choices, because right now people are just reading something online, or they are deciding something on their own, or any of their friends and colleagues what they are telling, and they are just going for new startups. So I feel that if we really channelize and if we provide them with this right advice, then I think we'll be in a much more better position to consult them, and they'll be pretty happy with the holistic advice rather than an isolated legal advice from us, or rather than an isolated advice about just a taxation law or tax or finance. So I think we need to be pretty proactive in advising clients about this startup schemes. Does a private limited need to have directors meeting every quarter or half yearly or yearly? Prasad, basically, yes. The moment we talk that there is a private limited company, OPC or an LLP, there are certain statutory requirements from ROC perspective. There are many, along with meetings, there are certain statutory returns which needs to be filled every year or every quarter. Now, yeah, for private limited companies, there are meetings which needs to be conducted annually. But since it's a closely held company, more or less, it's just a documentation part. I don't think so. You need to worry about actually, whether we will be doing any non-compliance. Yeah, but there are many private limited companies who don't even do it from a documentary or procedural perspective. And registrar of companies raising a lot of queries nowadays, because there are private limited companies who have not their statutory compliances, even though something is there in law. And yes, ROC laws the penalties are quite stringent. There is no upper cap. I have seen startups who have paid penalties in lakhs by just non-compliances, doing certain non-compliances. Now, Harpreet is saying, for small businesses, so far, it was the GST registrations and everything was quite mandatory if you want to sell something through Amazon or any e-commerce operators. But nowadays, recently, even few relaxations have been given, wherein you can approach e-commerce operators even without GST registration. And apart from that, technically see the initial 5 registrations which we talked, nothing else is mandatory as such. Prasad, yes, the companies which are incorporated prior to March 22, no, they are not eligible for any IT benefits. In fact, the limit was up to March 21. That because of COVID, it got extended to March 22. Now we don't know whether in next budget, if it gets extended, well and good. So far, it's March 22 only.
Hello, sir. I just want to know, sir, if foreigner want to incorporate an IT solution empowerment company from the tax perspective, what will be the better pitch or the idea that we can incorporate them? For example, the investment point of view, how much investment they can make and what is their limit in order to avoid FERA or FEMA compliance, and what is the simple solution that we can operate them from India as a whole? Thank you, sir.
So typically now IT industry is not something which is a restricted sector. So to be frank, quite freely it can be done. There is no minimum or maximum cap for such investments at the moment. What they can easily go for even a simple private limited company. They can pump. Of course, there will be certain RBI and FEMA compliances which will be in picture, but you can say nowadays the approvals for such small investments or small foreign companies is quite straight through. Means there are not much hurdles. So a private limited company can be formed with foreign directors. They can pump in money by just simply following RBI compliances, and most of the things will be easily taken care of at the time of remitting funds. The moment they remit funds to India, the banker in itself will be behind you to take care of most of the forms which are to be submitted to banks. And of course, we need to file certain FEMA and RBI returns to take initial approvals. That's it.
So thank you so much. It was a great webinar and really can't thank you enough for your active participation on our platform always. Thank you so much, sir.
Thank you. Thank you.